Today we're going to take a look at measuring reward and risk with OmniTrader Express. And I'm Jeff Drake, and in this presentation we're going to look at a simple little tool in OmniTrader and OmniTrader Express. However, just because it's simple doesn't mean it's not valuable. And before we even get to the tool and apply it to some of the current market candidates, what I want to do is talk about the importance of measuring reward and risk. And here I've created this table, and before I begin, let me just say that I'm going to minimize the interface here for webinar, so I wouldn't see any questions coming in, but I will answer questions at the end of the presentation. It won't be a long presentation, maybe about 20 minutes, so feel free to type in questions now as we go along, or you can save them until the very end, and then I will address any questions you may have on this topic or any topic having to do with OmniTrader Express. So this is a table that I created, and I call it the reward, risk, and accuracy requirements. And for those of you who have been trading a while, I know other people that have been trading, or for those of you that are just getting started, the tendency for a lot of people is once they get a profit in a trade, they'll take it. The human nature in us tells us that we want to win, and we feel like a win is to get a profitable trade. Well, that's one type of winning, but the actual goal in trading, of course, is not to be accurate, it's to be profitable. And let's take a look at the difference between different reward risk ratios and the accuracy required for profitable trading. At the very top of the list, you can see the reward risk ratio is 1 to 3. So let's just talk an amount of dollars to make it easy. I'll go ahead and take profits once I've made a dollar gain, or I'll take my loss once I've lost $3. And you can see that the accuracy required for profitable trading in this case is you'd have to be right as far as the average trade would have to meet this ratio more than 75% of the time. That is an astronomical accuracy rate. And even just below that, even 1 to 2, and this is actually very common in some people's trading. They'll say, well, I'll go ahead and take a profit once I've made a gain of $1, and then I'll go ahead and cut my losses after I've taken a loss of $2. Even with that ratio, you can see to the right, you are still required to be right 67% of the time at least in your trading. Not as bad as the 75, but still incredibly high. As we work down the table here, you can see a reward to risk ratio of 2 to 3 or 1 to 1.5. You still have to be right more than 60% of the time. Of course, the 1 to 1 is an easy one to analyze, right? Because there you just basically have to be right more than 50% of the time to show any kind of profits in your trading. Now, as we begin to work down the table, we can see the effect of looking for large profits and keeping your losses small. The next one down is 3 to 2 reward risk ratio, or 1.5 to 1, and you can see then you only have to be right for over 40% of the time to be profitable. A lot of futures traders will actually look for these types of results because of the leverage. They'll get these large gains, and so their accuracy may be around 35–40%. They still make good money in the markets because of the leverage. They're getting large gains and keeping their losses small. If we work down the table just a bit more, there is a 2 to 1 reward to risk ratio, and at this ratio you only have to be right more than 33% of the time, more than a third of the time, to be profitable trading. And that's really not that hard to do. We'll look at some charts and see a way to use the tool I mentioned in OmniTrader Express to help you find those type of trade candidates. And then down below that, 3 to 1 reward risk ratio means you only have to be right over 25% of the time to be profitable. It's a little bit harder though. Unless you have a very, very tight stop, the 3 to 1 ratio, it's hard to get the that size of a gain. So you can see the effect of keeping your losses small here and also trying to maximize your gains. It's an old axiom in trading, is you want to maximize your profits and minimize your losses. This table shows exactly why that is the case. All right, with that said, let's jump in now into the OmniTrader Express software. All right, now I've gone ahead and collected data for today's market. Another low volume day, but the market continues to push upward. It's been very resilient here over the last few weeks, just steadily posting these gains, and that occurred again today Even with a Fed announcement, I don't think anybody expected much of a surprise there, but it did post a slight gain in today's market as well. And I've run the analysis, and right now I've changed it at the top here to only show the reversal strategy. I'll explain why here in just a moment. And you can see the signals generated by OmniTrader Express. Once again, just to review the types of signals you'll see in OmniTrader Express, at the top we have the brand new signals. These are triangles with a circle in the middle. These are generated on today's data, meaning that if you would take the trade, you would enter tomorrow's market. Below that, we see these solid triangles. These trades were entered today then, as far as the analysis run with OmniTrader Express. Below that, we have a hollow triangle. You can see signal NSM. That means that it has already generated a signal, in this case a long signal, and the strategy that generated this, you can see reversal here, has fired another long signal. So this is called a reinforcing signal. And below that, we have the arrows to the upside, meaning that a signal was fired some time ago already, and usually these have already moved in their favor. So the best signals as far as trading are always at the top of the list. They're either the triangles with a circle in the middle or the solid ones. All right, so to the right here, let me move the interface. You can see I have some drawing tools at the very right edge of my screen. And here's one that says R. This is our reward risk tool. And I'm just going to go ahead and click on it, and I'm going to draw it so we can explore this tool just a bit. And you can see the middle line is the blue line. This would represent your estimated entry into a trade. And this is a long example, of course, because to the top of this tool, we have a green line. This represents the profit you would make. And below that, we have a red line. This represents the point you would exit a trade at your maximum loss. And you can see off to the left of this tool, it shows 1 to the top and 1 to the bottom. This means that the reward to risk tool is showing us a 1-to-1 reward to risk ratio. Let's explore it a bit more. I'm going to double click on the tool to bring up the properties. And here we have the settings. You can see the line properties, so I can color the lines any way I like. And below that, you can change it to show the absolute values or the percentage. If I change to that and I click apply, it shows the percentage lost or gained instead of the actual price values. So that's a handy little feature there as well. Below that, it allows us to extend lines to the last bar, or it can go only so many bars out, which is what I have selected here. It's going to go 14 bars out from where I place it. And the last one, and probably the most important, is the actual ratio that will be plotted. I'm going to change this to 0.5 to 1. I click apply, and now you see it's automatically adjusted to show a reward to risk ratio of 0.5 to 1. Now, we talked earlier about the ability, or the desire actually, to find trades that have a high reward to risk ratio, like a 2-to-1 ratio, right? Again, you only have to be right more than a third of the time to be profitable in your trading if you can average that type of reward to risk ratio. So let's go ahead and set this to 2-to-1. I'll highlight it and type in a 2. And I'm also going to set it as my default setting for the tool. So now every time I bring up the reward risk ratio, it will apply a 2-to-1 reward to risk measurement to the tool. I'll apply it now. I click OK, and there we have the 2-to-1. All right, so now how is this actually applied when we're looking at stocks in OmniTrader Express? Well, depending on the type of trade you're looking at, it can be very easy to apply it, or you may have to be a little bit creative in the application. And you'll see what I mean here. We're going to begin, as I said, with the reversal strategy. Let me remove this tool. And at the top, I've selected reversal for my strategies. Here's the drop-down. I've analyzed with all 3 of the Express strategies, breakout, reversal, and trending. Again, we're going to start with reversal. And so it's only showing the reversal trades. And it looks like we have a handful of trades generated today. Let me go ahead and start at the top here with BSX. And this is Boston Scientific. And a big gap down a couple days ago. It's starting to come back now. You don't see this too often.